Straight back into it.
And we're live again. Welcome back, Luke, to the couch.
I've had to put on a jacket because it's gotten very serious all of a sudden with $12.1 billion just being pumped back into the economy in various different ways, Phil.
Yeah, well, certainly not by any Coronas because we didn't have any in the fridge, so I'm a bit disappointed about that.
Yes.
But anyway, we carry on. But that is good news from the government in a time of distress and unprecedented times.
Yeah.
It calls for unprecedented action.
And this is big. Did you spot anything in there? I had some confusing. I take a while to work through government announcements because they quite often confuse me.
Oh, I am pleased I am not the only one.
And then I try and work out the rationale, the economics of them, and probably go a little bit too far down the track rather than just understanding what it may mean for clients. But
we've had some entertaining discussions since 2 o'clock, haven't we?
Yeah. You spot anything in there that's going to directly impact or potentially benefit some of the people that may be listening?
Yeah, so of that 12.1 billion, the wage subsidy I think is probably the single biggest one that is targeted towards businesses that are directly impacted by a top line revenue downturn. So a 30% decrease in revenue compared to the same period last year. January this year to June this year, so you'd be forecasting between now to June, and if you can show that your revenue has declined by 30% compared to the same period last year, you could be eligible for this. And 30% is a big smack to revenue.
That's a big drop in revenue, isn't it? Tourism, obviously, straight away, that's probably the industry that's going to be straight on the website. What website was it?
I think it's through
Ministry of Social Development.
Yeah, or Work and Income.
Work and Income.
Yeah, apparently there's a simple form. According to Grant Robinson, I haven't seen the form, but he assures us on his live stream that it's a simple form.
Yeah.
Stay tuned for that one. That you fill out, and by the sounds of it, you just need to be able to demonstrate that you have suffered a revenue decrease or are likely to suffer a revenue decrease in that time period, and you're eligible for that subsidy of $500 something for full-time employees, and on a per business basis up to a maximum of $150,000. So yeah. I think for those businesses, $150,000 over 6 months, it really kind of illustrates the size of the business that will really benefit from that. I think the bigger businesses, 150,000 isn't going to really do too much.
They have payroll bigger than that in 1 month, some of them.
Yeah.
This is your classic stimulus type package, isn't it, Phil? If I could just put my commentary.
That's a bit of economic speak there.
Freelance economics. Yeah. Most of these economists have gone out contracting now. Maybe they predicted or anticipated this recession and thought, I'm going to get out there and make a bit more money during this time because people are going to demand their time. Very smart top line thinking from them.
Yeah. But yes, it's all about pumping cash back into the economy
to keep it moving,
to keep the wheels moving.
Because if it's if it comes to a complete halt, we're in big trouble.
Oh yeah.
And hopefully that's what we're trying to avoid here from a government level by the looks of it.
Yeah, and I think they've just demonstrated that at the moment, one thing is critically important, and that is cash.
Yeah.
People need cash, and they need it in their back pockets. And I think with this stimulus package, they're encouraging people to go out and spend it.
Keep spending it so that the wheels keep turning.
Yeah.
Well, it'll be interesting to see how much this changes from now, the announcement, through to what actually unfolds. It's a pretty quick package of announcements. So I think Mr. Robinson, from memory of my politics, served me well. This may just be the start. So we'll stay on top of some of these things and how they're going to impact clients, because that's realistically, we know the questions will come back our way, and that's completely fine.
Yeah.
And so we're here to help with those as they progress. And a couple of little things for next year which got me excited.
Yeah, well, just on that wage subsidy, I mean, we've already briefly talked about our client base, and we'll be in contact with some of our clients directly to see which ones could potentially be eligible.
Yeah.
If their revenue has taken a hit.
Yeah.
But if you have, you're going to need to get in contact with your accountant or go directly to Work and Income New Zealand and get the wheels in motion. Apparently you can fill that form in straight away.
Yeah, and they've got the money to start paying out within 5 days, so they must be
ready to roll.
Yeah, they're really keen to get that cash back out there.
They got the money in the bank. They must have done some good cash flow forecasting.
Very, very smart. What about those that are like sole traders or don't have staff, but experience a 30% downturn? Are they in trouble? Or I didn't really think about that. But there was something about contractors, wasn't there? But if you're a one-man band, which we know that a very, very high percentage of New Zealand don't actually employ people. So
yeah, there was a separate assistance package for if you've got you're working from home or you can't work and you've run out of sick leave and that type of thing. So I think they have covered a lot of bases. Yeah,
That's good. I don't want those people to be left out, Phil. I'm an includer after all.
Good to see you working to your strengths there, Luke.
Yeah, thank you.
And the IRD, not to be forgotten, obviously, because there are some tax initiatives that have just kicked in. Probably one of the significant ones that I've never ever seen before is IRD are going to, at their discretion, remit use of money interest.
Yeah.
Which is big, because normally it's pretty difficult to get your use of money interest remitted.
So that means, for the person out there that wants that in layman's terms, that means you can't afford to pay tax. They're going to charge you a heap of use of money interest, and you write to them and say, well, actually, the reason I haven't been able to because of these circumstances, and they may say, oh, actually, we'll write this off. Is that how you reckon?
Yeah, if you tie it back to cash flow issues as a result of the coronavirus.
Yeah, not just
because I'm poor at managing cash flow by the sounds of things. Then you may well qualify for an interest write-off.
Wow.
But if you're unaffected by coronavirus, then pay your tax as normal.
Yeah. What about from 1 April next year? I think I read that they're going to move the low value asset expense methodology, which if you buy an asset that's under $500 in value, you can expense that in the year rather than capitalising it, making an asset, putting it on your balance. That will move to $5,000 for 1 year. For 1 year,
massive planning opportunity there for business.
Yeah.
So if you were about to go out and buy the latest MacBook, for example,
you got 100 staff you need to get MacBooks for.
Yeah, maybe defer that until 1 April.
Yeah, potentially, and maybe keep it on individual receipts as well, though, because if you put it.
Oh, look, I think there are some rules around that, but we won't get into the technicalities here.
We'll monitor.
But I think yes, that you raise a really good point. The low value asset threshold has gone 500,000 permanently, but for 1 year only, it's gone to 5,000.
And then it'll drop back to 1,000, does it?
Back to 1,000 from April next year. So take advantage of that 5G.
Yeah, so some permanent changes to tax legislation coming out of this
coronavirus.
Yeah. Wow. What else was in there, mate? Anything else that just skimming past a couple of these things? 126 million COVID-19 leave and self-isolation support, 2.8 billion income support package for our most vulnerable. It's probably not going to affect too many clients unless you're selling to that demographic. There may be something for you to think about. They're going to have a bit of extra cash.
Business, the other big one would be the old provisional tax.
Provisional tax, yeah.
Yeah, threshold's gone from $2,500 to $5,000. So in technical terms, it's your residual income tax. If you don't get it, don't worry about it. That's what the accountant's for.
That's all we figure out. We'll figure that out.
But the message has been that it's provided some cash flow relief. I would interpret that to be more timing relief. So rather than having to pay tax 3 times throughout the year, you're just deferring it to one lump sum at the end of the year. So it doesn't mean you're not going to have tax to pay. It's just pushing out when you have to pay it.
So with that one, there's no real tax straight into the pocket, is there, or extra?
No.
Yeah.
No. I mean, it does provide some working capital relief in terms of keeping some cash in the bank.
Yeah.
But you will have to pay that tax at a point in time, and it's going to be a bigger lump sum. So if you're not a fan of writing out checks to the IRD, and I, to be honest, don't know many people that are.
Yeah.
But it's a fact of life. If you're not a fan of writing up big checks, then maybe continue to pay your provisional tax and some more consistent instalments just to ease the burden.
Now more than ever, people need to understand how to manage cash, how to manage cash flow, how to understand tax, and when and how to pay it, and how to defer it if need be.
I think on the provisional tax one, it could be an opportunity for businesses to look at moving perhaps from a standard or estimation method to the AIM method.
Yeah, okay.
And so if your revenue has taken a hit,
Yeah.
then you can match your provisional tax payments with your turnover, and not pay so much tax now, and wait till business picks up, hopefully later in the year.
Yeah.
When it does pick up later in the year, because we've got a positive mindset.
Yeah. Because you're doing.
We're going to hunt out those revenue gains.
Yeah.
And when that cash comes in the second half of the year, then you'll be able to catch up on your tax.
There we go. There's a lot to think about. The thing is, I guess, is not to try and figure it all out for yourself and sing out if you do need a hand, because there's going to be enough overwhelming information out there already. We're just trying to work through what some of these things mean and how to best utilise them and what you need to do. So
the other big change there was allowing depreciation on commercial and, what do they call it, industrial buildings.
Yeah, that's a big thing.
Massive, yeah. And I think I've heard it was 2% diminishing value.
Okay. Yeah. So you got a.
Don't quote me on that. It's not written down here, but from 1 April this year, your commercial landlord is going to be able to claim depreciation on their building, which for them is going to mean a bigger expense, lower profit, lower tax, and it's going to ultimately keep some cash in the bank for them.
So if you're renting a commercial building, you want to go straight to your landlord and say, hey, I know you're going to get a decrease in your profit, therefore I want you to decrease my rent.
Yeah, let me know how you get on with that, eh?
How do you reckon that's going to go?
Yeah,
how many landlords are going to pass that on and give them a hand?
Yeah. Look, do you reckon this would qualify as an industrial building?
Surely we can make it work.
At the old office.
So if you've got $1 million building that you're operating out of,
it's probably a $10 million building.
10 million? So
yeah, $1 million is the average Auckland house, right?
Yeah, that's true. Yeah, okay. Well, 2% on $1 million is $20,000.
I suppose the maths is easy, right?
Yeah. I can bump it up to the 10 if you want. 200,000. Yeah.
200.
Anyway, okay. Well, there's a fair bit to unpack there as per normal when these sorts of things come out. So we will stay all over it. I'm sure Phil will be knee deep into some of this stuff tonight, and probably on the phone to Grant Robertson to give him some further advice around, or maybe on the social pipes just to say, hey, look, this is what I would have done.
Look, a tax cut wouldn't have gone amiss.
I knew you were looking for a tax cut, weren't you?
Probably a bit more far-reaching.
Immediate relief for the economy and through the taxpayer. So
Well, and, interesting New Zealand's response compared to Australia's response.
Yeah, any big difference there?
The one that we've seen, what I heard from you is there's some lump sum payments.
Lump sum payments, yeah.
And they sounded real hefty.
Yeah, they weren't small.
No.
Yeah.
And for business, something that I did read that we got emailed was businesses can get up to 50% of their PAYE, or they call it PAYGW.
Yeah, YGW.
Over in Australia, you can get some of that refunded back between January and June.
The employer?
If you call it the employer.
Yeah, gets it back.
50% of your PAYE. And there's certain amounts and thresholds similar to what's going on here.
And they put it back into their business.
Yeah.
Wow, different landscape. I guess the key to mention there is to not get worried about, worry about the things that you can control. And things in here that won't help you at all. There'll be clients, there'll be businesses that get a lot of relief out of this. There'll be some that get absolutely zero. So don't get too bogged down in the things you can't control and what may not have gone in your favour. Focus on what you can control and get back to basics.
Totally. Yeah. If you don't qualify for any of this stuff, don't let that get you down.
Yeah.
Because it will lead to being a distraction, and you'll then, have your and so on, as I like to call it.